A lease termination penalty is a fee incurred by the lessee for breaking the lease early. These are accounted for at inception when the entity knows in advance for certain they will exit the lease early. The payment for the penalty is included in the payment schedule and is discounted to present value when determining the value of the lease liability. In our example scenario, an entity has entered into a lease arrangement for a 5-year term. Payments are $100,000 payable at the end of each period, and the interest rate is 5%. This lease is subject to a termination penalty. If the entity wishes to terminate the lease, they will have to pay $150,000. The entity plans on exiting the lease in the 3rd year of the lease term. Let's look at how to account for this. We can begin as usual with the measurement of our lease liability. Let's stop and think about what we need to consider in terms of our liability. We know we have fixed payments each year. We also know that in the 3rd year we have a lease termination penalty. We do not have any variable lease payments, residual value guarantees, or purchase options. As such, we can simply plot these out per period for discounting. Remember, our fixed payments are $100,000, and our lease termination penalty in the 3rd year is $150,000. Therefore, our payments are $100,000 for the first 2 years, and then $250,000 in the 3rd year. We can then calculate our discount factor for each period. This slide has been included for reference. Please pause to read if you need to, otherwise check out the video on simple leases for more detail. And we can then multiply these through to determine our discounted payments and total them to arrive at our lease liability. Let's look at the right-of-use asset now. Let's think about what we need to consider. In this case, we have our starting point, the lease liability. We do not have any payments at or before lease commencement, nor do we have any initial direct costs or dismantling and restoration costs. To measure our right-of-use asset in this case, we can simply take the lease liability. We can post our journal to recognize initial measurement as such. Right-of-use asset and lease liability debited and credited respectively to the extent of the lease liability initial measurement. Moving on, we can now begin working out our lease liability and right-of-use asset schedules for subsequent measurement. Our lease liability schedule will begin with our initial measurement of the lease liability. We can then add interest by applying the interest rate to the opening balance. We can then deduct our payment for the period as per our payment schedule used to determine the value of the lease liability. This will give us the closing balance for the period, which will be the next period's opening balance. We can follow this through for each year of the lease term. If we have done it correctly, the closing lease liability in the final year should be 0. Moving on to the right-of-use schedule, we can once again begin with our initial measurement of the right-of-use asset. We need only to calculate our depreciation expense and deduct it each period to arrive at the closing balance. This is calculated as the initial measurement divided by the number of periods of the lease term. In this example, it is 5 years. Our opening balance less depreciation gives us our closing balance. The closing balance for one period becomes the opening for the next, and we can follow the calculation through each period. Again, if done correctly, the right-of-use asset in the final period will be 0. Each period we can debit depreciation expense and credit accumulated depreciation right-of-use asset. Journals can be posted based on the schedules prepared. As an example, the first period is shown. Each period, interest expense will be debited to expenditure, with the lease liability credited. The lease liability will be debited to the extent of the lease payment for the period, with the credit to cash, payables, or expenditure depending on the circumstances of the entity's accounting process. Depreciation will be debited to expenditure with accumulated depreciation on the right-of-use asset credited. And with that, we have appropriately accounted for termination penalties under IFRS 16 leases. Thank you for watching. If you found this video helpful, please like, subscribe. Feel free to comment any topics you would like to see addressed in future videos. Check out financialreporting.wtf for more. See you next time.